Hard money loans for business, finding the right moneylenders for capital business financing. Call 888-653-0124 today or click the link in the description to learn more. One of the biggest challenges for any entrepreneur is finding capital to fund their businesses. In fact, according to the Small Business Administration, only 30% of small businesses receive financing through traditional bank loans. How much capital does your company require? Is it time to expand or start a new venture? If you answered yes, then consider applying for a hard money loan from a lender who specializes in providing financing for businesses. So what happens when banks won't lend you money? That's where hard money loans for business come into play. They're willing to offer short-term loans to help finance your business. Hard money lenders specialize in lending to borrowers who don't qualify for traditional bank financing. They offer competitive rates, flexible terms, and quick turnaround times. In addition, they often have access to real estate collateral that other banks won't touch. But before you shop around for hard money loans, there are some things you need to consider. Construction loans. How much can I afford? If you're thinking about getting a hard money loan for your business, here's some important information to consider. First, let me say that hard money loans are not for everyone. They are only appropriate when there are no traditional financing options available. They are expensive, typically between 4% and 8%, and require strict documentation. So be careful. Second, they are not a loan. Instead, they are a capital investment that allows you to purchase property at below its fair market value. This means you pay a lot up front, but you may end up making a profit after selling the property later. Third, you must be able to prove that you need the funds now. And finally, you must put down a large deposit. Now, let's talk about how much you can afford. The amount depends on several factors, including the type of property you plan to purchase, the location, and the current state of the real estate market. How commercial bridge loans work. Commercial bridge loans are short-term financing solutions designed to help businesses grow. They're typically used when cash flow becomes tight because of seasonal fluctuations, unexpected expenses, or slow sales. They work by providing a line of credit that allows you to borrow against future income. This means you won't need collateral, like real estate, to secure the loan, making them ideal for small businesses who may not offer collateral. Unlike traditional bank loans, commercial bridge loans aren't based on credit scores. Instead, lenders use a combination of factors, including past performance, current financial health, and projected growth, to determine whether to approve a loan request. If approved, you'll receive funding within 24 hours. Once the funds arrive, you can pay off the loan. When you apply for a commercial bridge loan, you'll fill out a simple application form. The lender will review your information and decide whether to fund your loan. Your application process will include details like your company name, address, contact number, and previous lending history. Once you've been accepted for a loan, you'll sign a promissory note agreeing to repay the amount borrowed over a set period. Lenders usually require borrowers to pay back between 12 and 18 months. After signing the agreement, you'll submit a security deposit equal to 20% of the total loan amount. This ensures the lender has enough money available to cover any losses should the borrower default on the loan. Finally, you'll complete a thorough appraisal process to ensure the property securing the loan is worth the full value of the loan. After reviewing the appraisal report, the lender will issue a final approval letter stating the exact loan and the repayment schedule. Your loan will be funded once you meet the following conditions. You must have sufficient cash reserves to cover the entire loan amount plus interest payments. You must have access to additional capital to cover the remaining balance of the loan. You must be able to show that you can repay the loan. Asset-based loans. Who should use them? An asset-based loan is a type of hard money loan where the collateral used to secure the loan is real estate. The borrower owns the property outright, and the lender finances the purchase price. There are two types of asset-based loans, seller financing and owner financing. Seller financing occurs when the borrower sells the property to the lender at a discounted rate. Owner financing occurs when the borrower purchases the property directly from the lender. Both types of asset-based lending require borrowers to pay down the principal balance over time. This means that the interest paid on the loan must be greater than the amount borrowed. If the borrower defaults on the loan, the lender may foreclose on the property and sell it to recover its losses. However, this is not usually necessary because most lenders offer an insurance against default. Residential rehab loans. If you're looking for hard money loans for residential rehab projects, there are several options available. The most common type of loan used for this purpose is called a construction loan. This type of loan allows you to borrow funds for building improvements at a fixed interest rate over a set period. Another option is a hard money mortgage. These types of loans allow borrowers to purchase property outright, rather than refinance existing mortgages. There are many benefits to these types of loans, including lower rates and no prepayment penalties. However, they come with some drawbacks too. One drawback is that lenders typically require higher down payments than traditional mortgage programs. Another drawback is that they often carry higher closing costs. Renovation costs. Some renovations cost thousands of dollars, while others only require a small amount of work. Renovations can include everything from adding a bathroom to updating appliances. Before you begin any renovation project, consider these questions. What types of materials will I need? How long will the job take? Will I need permits? Can I find contractors who specialize in this area? Do I have enough cash flow to cover the project? Once you've answered those questions, you'll be able to determine whether you should hire a contractor or perform the work yourself. If you decide to hire a contractor, ask him or her to give you a written estimate. This document will tell you exactly what you'll pay for labor and supplies. Keep in mind that some projects will require additional fees, depending on the scope of the work. For example, if you plan to add a swimming pool, you'll need to purchase a permit from the city. Another important factor to consider when determining renovation costs is the location where you live. Some areas are very expensive to renovate, while others are relatively inexpensive. Benefits of using business term loans. Business term loans offer many benefits over traditional bank loans. They're usually cheaper than conventional loans because they require no collateral and typically carry lower interest rates. They're also flexible, allowing businesses to borrow at any point during the loan period. This means there's no need to wait until the end of the month to pay back the loan. Finally, business term loans are often used for short-term projects, meaning they're ideal for small businesses looking to grow. Take advantage of our flexible loan options. Call 888-653-0124 today or click the link in the description to learn more.